All right, Mark here. Welcome to another Greenbridge Investing market analysis. You're watching the live stream here, and I want to thank you all for joining me. If you're new to Greenbridge, make sure you check out our website at greenbridgeinvesting.com. We have swing trade signals by text and by email. We have portfolio management ideas, and we have analysis in our chat room every single day. Okay, so with that being said, let's get through this. Now, we're going to focus on Bitcoin today, and then we're going to get into the other markets. So if you have questions about specific stocks or other markets you'd like to see, you can put the symbol in the channel now. So this is for educational purposes only. For investment advice, please consult a licensed investment advisor. And by the way, if you like this channel and you like the videos I'm doing here, please give me a like, press the like button as they all say, and subscribe to the channel so you'll get a email notification every time I do one of these. Okay, so let's begin with Bitcoin because that's the theme of today's video. Now, as many of you know, we have been long Bitcoin since 92.25. Okay, and that trade was called back on the 28th of June, I believe, and it reached all three of our targets. We had to wait a month, but it got there. Okay, and that's the thing. All during that consolidation, people were giving me a hard time about, oh, you're wrong, it's not a long, blah, blah, blah. But we believe in our system, and we had a stop in place. So, all right, so you all know that because I must have said that about 1,000 times since we've reached our third target. So the question is, where are we now? And what do you do if you were not in Bitcoin? And where can this thing run? So here's the thing. Right now, the momentum is strong. When you get a breakout like this from a consolidation and the breakout holds like it's doing, I mean, it broke out decisively, meaning this candle right here, this breakout candle did not give it back. The next candle didn't give it back either. Okay, so that's pretty much a confirmed break, and you get a lot of new buyers jumping in. At the same time, remember, half of this population, in theory, are short or were short. So all those shorts are also buyers while they're getting margined out of their positions on BitMEX. Okay, so the thing is, this thing looks like it's going to go for another leg here. We have this inside bar. Yesterday's candle is this inside bar, and it's basically messing with the high of that inside bar, which is technically a buy signal. But here's the thing. We can't just go long here, although there's a buy signal at such a level. And the reason is the risk of retrace is very high. Okay, this is not the location. We were buying it in the low 9,000s where the risk was attractive. Why would we be buying it now? Okay, this is where uninformed investors, people that follow news, people who react, this is where they buy it because they think it's safe now. But this is where the risk is the greatest. Okay, now look where we're going. We have this resistance zone, which Andrew actually talked about this. There was an inflection point around that 11.6, okay, around there. And there is a resistance zone that dates back to, what is that, August of 2019, okay? So there's a zone up there, and price has reacted bearish, in a bearish way in that zone. So yeah, it may push a little further into there, but buying it now, especially for a swing trade, is a bad idea. So here's the thing. Where do we buy it then? Because it's long. It's not a short. I wouldn't short this thing. Just like gold, just like the euro, just like the pound. They're not shorts. So what do? You wait for a pullback, right? And that's the point that I want to make here is where is the best place for the pullback? That's the inflection point. And the first inflection point is obviously going to be the old resistance, okay? And that old resistance was here around 10.429, 10.5, around there. See this high right here? It's about 430. Old resistance becomes new support and vice versa. That's a market tendency that tends to repeat itself. And there's a psychological reason for that. So we want to see price pull back into that area. Now, it may not touch 429. It just may not get there. It may find support at a higher price. But the thing is, we want confirmation. Why buy the high when chances are, because again, we play probabilities. Chances are you'll get a better price, number one. And number two, you're getting a much higher probability trade when you wait for that pullback. is Bitcoin just going to go vertical straight to 20,000? No. What if Bitcoin breaks into the 11.6 area, right, or higher, and then pulls back and goes nowhere near this 10.4? Well, we'll find the new support when Bitcoin shows it to us, and then we can work with it from there. Okay, so that's what you have to wait for. That's how you play this game. Okay, now hold on a second here. Just give me a second. Hold on. Sorry, guys, 1 second. Okay. All right, sorry about that. So you guys still with me? So here's the thing. So we want to see the pullback, and we want to see that retrace somewhere. And here's the other thing. You can't feel like you're missing out on anything here, okay? You're not missing out. If you did not buy it in the low 9,000s and you're watching this vertical move now and you think it's just going to keep going, and then you read some blogs or you read some stuff on Twitter, you know, everyone's all excited. This is the herd mentality, okay? Hey, Ankit. Right. This is the herd mentality, and you don't want to be reacting to it. You want to be ahead of the herd. We were ahead of the herd at 9,200. We were willing to take that risk, okay? And we knew what we were doing. We knew what to expect, and the market paid off. It doesn't always work out like that, but that was where the reward risk was attractive, and we got out very easily at our targets, okay? It went through our targets, and it keeps going. All right, whatever. That's cool. But the point is, this game is about risk management and capital preservation. This is not about home runs or lottery tickets. I mean, many of you, like Ankit, you know, and DJ and, you know, Carlos, you guys have heard me say that a million times because you come to all my things. But anyone that's new that's watching this and you know, they're being exposed to a lot of this stuff that's going on. Oh, you know, this stock did this, and this stock is up this much, and I made this much, and blah, blah, blah. People think that it's easy money, and they think that, oh, all I have to do is buy it when it looks like this, and it'll just keep going. And the market is very deceptive, and it will randomly reward you sometimes for that ineffective behavior. But over time, you guys know what happens. All right, so enough about Bitcoin. That's the story there. We want to see a pullback. And right now, at this moment, the inflection point is 10,400, and that can change, but that's what we're looking for now. All right, so we want to be ahead of the herd. Now, let's get into some of the other markets here. By the way, if you have any other questions about Bitcoin, let me know so I can address them. If you're new to Greenbridge, again, make sure you subscribe to this channel. Make sure you like my video if you like it. If you don't like it, you can let me know that too, because I always want to make this better for you. And if you have a stock or a market you'd like to see, put it in the channel. All right, so I'll get to it. So that's Bitcoin. Let's get to something else here now. I want to talk about the NASDAQ, okay, NSX USD. This is the CFD version of the NASDAQ 100. And I like to use it because it doesn't have the market closes, right? This is more of a reflection of the futures. And, you know, so the candles are much nicer, easier to look at. Now, we've had some bearish price action in recent days, but as you can see, and today was an important day with the FOMC and all that, and the type of potential that a day like this can have on this type of market can be dramatic. As you can see, we don't have any dramatic action here. All we're getting is this little consolidation situation. We're just getting price noise. My theory, you know, or my idea, my premise right now is that we're in a consolidation. All right, this is the beginning of it. These tend to, as you could see, these tend to act as continuation patterns. You don't know when it's going to break out. They can be very noisy, and it can test the lows of the range again. The common mistake that people make here, oh, absolutely, DJ. The common mistake that people can make here is they think this is a short. Okay, they think, oh, the market's turned, the party's over, and this thing is in a bear market, and blah, blah, blah. If you see stuff like that, please laugh at it or, you know, view it as entertainment, because there's nothing bearish about this market at all. Okay, we have this, as you guys know, because you guys came to my webinar the other day, and we talked about this, right? This is a bull market. There's no question, right? Of higher highs, higher lows. And just because we have a double top up here doesn't mean that we have a trend reversal, right? So you guys know that. So the key to the NASDAQ is you want to see if we can get a failed low, or if you want to see if you can get a higher low. That is where the opportunity is. So if you can get into something like that, and that's good for stocks, okay? We have a bunch of stocks on our radar. I know Andrew exited a bunch too, like he got out of gold and all that stuff. But that was, you know, he has information that goes beyond a chart. You know, as a gold dealer, he has access to information, or basically heard when they're contacting him at the top. So that's why he'd rather take the money when he sees those signs. He's seen them before. Okay, so the thing is with the stock market, again, we want to see this NASDAQ pull back, test this low. That would be ideal. Doesn't mean it will do it, but it would be ideal. And then give us a buy signal here. That would be an excellent signal for stocks, at least for an attempt at the new high. Will the NASDAQ make a new high? I don't know. But at least it's reasonable to anticipate an attempt. The point that I want to make is, again, this is not a bear market. There's nothing bearish about this. This is not a short, especially for a swing trade. You know, if you're on a smaller time frame, it's a different story. Like you saw what we did with the call options, and you saw what we did, you know, for this leg. But that's a quick bite. You know what I mean? We know we don't expect a really broad move. But in case the market gives, you know, delivers one, we want it to be in position. But you as you guys saw in the chat room, we were quick to get out of that. Okay, anyway, so that's the NASDAQ. Again, any questions, please let me know. Now, let me go over, I want to go over gold real quick, because gold has been nuts. All right, XAU, USD, and silver. Look at that. I mean, vertical, okay, vertical. And the gold mining stocks have done very well in this. This is the opportunity to lock in your profits, as we've been talking about. Can this thing just keep going like this? I mean, it can do whatever it wants, okay? But you have to understand that moves like this are not sustainable, and people get the most frantic near the top. So what you will see in this type of environment, and look, there's fundamental reasons, and you can say, well, you know, the dollar is going to zero, and you know, they're printing money all over the place, and all of that is true. But you want to know something? All of that was true was back here, back here, back here. That was also true back here and back here. And as you can see, there were pullbacks, okay? But you had to, it wasn't the fundamentals that got us into gold. It was the technicals. And, you know, we're out of gold, you know, with our swing trades. But again, just like Bitcoin, we want to see the pullback. And it will pull back. Most likely after a situation like this, it will most likely consolidate. And that's what we want to see. Kind of like this. And when gold consolidates, it sucks. Okay? I mean, it was consolidating, what is this here, for like 2 months almost? And it can be very tough to play in that. So, but we want to see something like that. That's where the opportunity is. Even if we take small bites out of it, that's all we're after. We're after good reward risk, not home runs. So don't be distracted by something like this. People see this and they're like, oh man, if I bought it here and I'd be, I have so much money. Why didn't I just hold it? Why didn't I use a trailing stop? All this. Don't be distracted. These moves are rare. We're not interested in home runs because they're not frequent. Okay? So now let's take a look at the British pound real quick, and then I'm going to get to your stocks. So again, guys, if you have any particular stocks or even a market you'd like to see, you know, if it's not a stock, let me know and we'll go over it. Okay, now the British pound, same deal, right? And the euro too, same deal. What's going on here? Well, it's the inflationary situation with the US dollar. Okay, so these things are all basically going vertical, but they can't sustain these type of moves. I mean, just for an example, just look back here when it sold off dramatically like that. It didn't go to zero, right? It didn't go to zero. It recovered pretty quickly, ranged, consolidated for a little while, and eventually found its way out of the consolidation. Okay, and we got long the pound a few times during this situation. I believe we had a long back here. We had a long over here somewhere. Okay, I don't remember the exact numbers. I know 25.70 was our recent long in the pound. And, you know, yeah, we left a lot of money on the table. But do we get upset about that? No. We're only interested in consistent, attractive, reward risk situations. That's it. Okay, and high probability. We don't know. How much they run is random. There's no way you can predict that. So we're just happy to make more than what we were willing to risk. Now, that's the pound. Okay, so enough of these. If there's another market you guys like to see, please let me know. Let's get into stocks. And I have one here from Carlos. Can you take a look at BAP for a potential double bottom, even though it's underperforming? Sure. And I got one for you guys too. So let's take a look at BAP first, BAP. Oh, this is interesting. You know why this is interesting, Carlos? Because I had a stock that looks similar to this, sort of. Now, so I guess these guys are, from what I can see from their name, I guess they're involved in banking, I would imagine, or lending. So you have the double bottom situation here, which is true. How much is this thing? $123 low right there. And then you're looking back at these lows over here. So you have that double bottom, but there's one problem with this. This would be more, I would say this would be a better probability if you clear this resistance first. I mean, if you take a trade like this, yeah, your risk is very well defined because you have that low there at 123.90. So you figure you give yourself an extra $1. So maybe like 123 even is your risk. If you get into something like this now, you need this thing to break out. The problem is, what you are dealing with is this gigantic lower high. Because in theory, when you see something of this magnitude, right, because this thing looks pretty bearish based on that, this thing in theory should make a lower low, okay? And it still can do it if it doesn't clear this resistance. I mean, the probability still favors that. So that's what you have to be careful of. The high here is 131.20. So you need to clear that 131 level. And then that thing, I'd say this bearish situation would then be compromised. But until that's cleared, you're still facing that. So that's what you have to keep in mind. Okay, now I don't know why this thing has been bearish recently. Again, I have no idea. It's the first time I'm looking at this. So that's just something to keep in mind. Look, we don't know when things change sometimes, right? A chart can't really give you every answer. So this bearish momentum may be broken. I just like to see the proof when it takes out this lower high here. And then of course I'd like to see a higher low. So one idea or one way to go about getting involved in this, if you're interested in this, is you could take a small bite, right? Take a fraction of the size that you normally would take. So instead of 100 shares, let's say you trade, 15 shares. Like, oh, that sucks. I'm not going to make any money with that. But the thing is, if it takes out the low, you're not going to feel much pain either, right? In fact, you may even give it a chance because you're like, well, it's only 15 shares. And then it gives you another buying opportunity. Perhaps you could put on another 15 shares. If the thing bases and you've accumulated a little bit of a position, then the thing starts to go. Now you have a very attractive position. Okay, so it's either that or you buy something small, again, like 15 shares, takes out the high, and then you buy the breakout with like maybe another 30 shares or something. Okay, and then the next pullback. So you keep buying as it gives you positive points, positive actions, rather than, oh man, this thing's pushing lows, I'm just going to keep buying more. You do not want to do that. People get that confused all the time. They say, oh, you're buying more, you're doubling a loser and this and that. But the thing is, that's all really a matter of perspective. Okay, if the thing is in a bearish trend and you just keep buying new lows, yeah, that's bad. But if the thing is not in a bearish trend or the trend is changing and you're putting on carefully sized increments or units, then you're managing your risk in that way instead of buying everything at one price. Okay, so that's how I would consider that one. I don't know the stock, and I'm not really excited about that chart. But thank you for bringing that up. Okay, so let's see, AXTI. Okay, sure, Hamid, we'll take a look at it. Right, Ankit. It's really that sizing makes you a strong hand. All right, because this game is a big psychological game. A very common mistake that people make who don't have experience is they take a too large of a bite. They get too big too fast, and they don't realize when the thing goes against them what that negative P&L looks like. And that will affect you psychologically, and you're more likely to bang it out and react, react through fear, and that's what the herd mentality is. It's a lot of people reacting the same way because they're reacting on their emotions. And human nature doesn't change. Okay, so let's now here's one I want to show you guys. ADVM, okay? And then Hamid, I'm going to go over yours. So ADVM is a pharmaceutical, biotech, whatever, one of those. And it's pulled back similar to that BAP stock you just showed us. All right, similar to that, but as you can see, it's got this, instead of a bearish structure behind it, we have a bullish structure behind it, okay? So I like that, that's a positive. Also, this support that it's fooling around with right now is an old resistance from back here. Look at this, 1670 was this old resistance. What a coincidence, it finds support there. Is that, is that random? What is that? Why does that happen? It's because people that get short, mistakenly, there's a tendency to hold on to that position. And when it comes back to your price, what do? You get out, and that creates buying. On top of that, you have buyers that have been waiting to get in, and they're buying too. So that's what basically turns that old support into the old resistance into a new support and vice versa. Okay, so I like the situation here. I like you get this little double bottom situation going on. Plus you have this historical low back here around that 1670 area. It looks like we're getting a green candle today. Nice. So basically taking out this high tomorrow, 1706, taking out that high would be the technical signal. And your risk is very nicely measured here. The low is 1659. So you figure if you put your stop at like 1550, you give it $1. You're inside the gap at that point. And typically gaps will also act as a support. See this gap back here, or a resistance. So you have all that working for you. And the potential is decent, right? If this thing has a leg up, even if it just goes to the middle of the range, forget the high of the range, even if it goes into the middle, you're looking at 2189. So you're risking like $1 to make at least 3, maybe 4. That's good reward risk, okay? And we have the structure. So you see how all the criteria lines up? That's much more attractive. So this is on the radar. We may call this one either today or tomorrow, okay? So keep an eye on your text, on your phones and on your emails for that one, all right? I've been watching this one for a little while. Yeah, if we get involved in this, definitely we'll send it out. We'll send it out as an official swing trade. And you'll get the text and the email. All right, so anyway, so I want to point that one out. Okay, so let's take a look at Hamid here. Hamid, what do you got? You have AXTI. Let's take a look. Let me see here, AXTI. Okay, Hamid. AXT Incorporated. So I'm not familiar with them. Now, but just like the one I looked at, ADVM, you're coming from a bullish structure, which is good, all right? Consolidation, higher, broader, higher, low, just like we saw in Bitcoin. Okay, good. You are near the range low. All right, so the location isn't bad. How much is the low? What's this low over here? $4.31. I like the price. It's inexpensive. And so here's what this thing is missing right now. You have this bullish candle today, which isn't bad, but it's not really a clear signal. What I would like to see on something like this, what would be ideal, which doesn't have to provide, but it would be ideal, is if we saw the failed low, meaning it tries to take out 4 1/4 and then gives you a pin bar. That would be ideal, okay? Or maybe this thing gives us like a little mini double bottom, or maybe it pops up a bit and gives you a higher low. I mean, those are the situations I would like to see. Hey, Shashank, how are you? Shashank. I hope I pronounced your name right. So that's what I'd like to see in something like this. But it's a little early here. Now, since it's an inexpensive stock, I mean, what's this thing right now? It's 464. So even if you take a small bite, you're measuring your risk from 4 1/4, right? And plus, you have to give it some more room. You can't put your stop there because everyone puts their stop there. So you figure you're going to have to put it probably around maybe 390 or something. You really need to give this thing some room, because there's going to be a lot of noise. This is also, you have to keep in mind, these inexpensive stocks. I mean, how low is this thing back in March? $1.86. These are very popular with day traders. All right, they see stocks like this, they pile into it, and that's why you get these moves. So you have to be aware of that. And also, I mean, if they're all bang out of it at the same time, you have the same problem, right? It bangs out dramatically. So you just have to keep that in mind. So that's how I'd look at that. Ideally, I would like to see that failed low. Otherwise, there's no setup at the moment, but the location is attractive and the reward risk. All right, so thank you for sharing that. Okay, let me see what else I have here. Baba, sure. Let's take a look at Baba. And I'm just looking at the questions. Michael, on ADVM, do you need the market to cooperate, or is this, well, ADVM is one of those biotechs, which means it's going to be more sensitive to news. You know how those biotechs are. They just move on their own, for their own reasons. So it's not exactly a market stock, okay? ADVM is probably more on a day trader or radar, especially if it pops. You're going to see day traders, because again, it's inexpensive, you know? So you have to watch out for those things. But that's the thing. If the market pulls back, I don't think it will be as affected. But the thing is also, the market is not exactly pulling back either, right? So I'm anticipating that maybe we get a test of the low of the range and we turn, which should be a positive for all stocks in general. But we have to see. All right, now, so here's Alibaba. And again, coming from a bullish structure, and you're consolidating here, right off the bat, this is what I see. I see a symmetrical triangle right off the bat. You see it? You see the symmetrical triangle? Here, I'm gonna draw it in here. So you have that, okay? And you have the low one right here. See that? So that's a continuation pattern. So I like that. It's definitely a bullish sign. You have an old resistance back here, all right, which was what, 231. The only thing I don't, this is a little expensive. So it could be a little trickier. It could be a little bit more tougher to deal with as far as taking stops and stuff like that. You have to give these things a little more room, which again, how do you compensate? You just take a smaller position. At least that's how I would do it. So you're in this range. Again, there's no signal here to go long, and you're right in the middle of the range. So this is a tough spot because it can pull back and test the low again, or it may just continue higher. It's like a 50-50 chance here. I don't like this location. I don't like this type of position. So what I would like to see is a test of the low of the range, which is 241. So you figure 240-ish, something like that. Mid 241s give you a failed low. That's an opportunity there. Again, see, when you see stocks that maybe you like the stock and you say, hey, but it's strong and I want to be involved, keep in mind, there are so many other stocks and so many other opportunities that offer much better reward risk and much better setups and everything else that, you know what, you just keep this on your radar and you wait until it gives you an ideal setup, right? It's not like this is the only stock to deal with. So based on this, I like the general structure. It's bullish. There's no question it's bullish. I just don't like the current location. I prefer somewhere around that 245 level, or maybe somewhere a little higher as maybe a higher low or something, followed by an inside bar or a pin bar. That's what I prefer on something like that. Now, keep in mind, this one is a little bit more reactive to the broader market. I mean, I've seen when the NASDAQ gets hammered, this thing gets hammered too, right? I've seen this many times, especially since, it's got the whole Chinese relationship, I believe, right? Alibaba is correct me if I'm wrong, Alibaba is the Chinese version of like Amazon or whatever, sort of, something like that. I think, right? So you have to keep in mind that these will be a little bit more reactive to the NASDAQ. And, if the NASDAQ has that test of the range low that I'm looking for, you may get that in this as well. All right, so thank you for bringing that one up. And to answer your question, does it have a double bottom? Yes, there is a double bottom in place, yes. But it's still lacking the setup. All right, so Michael, okay, I answered that question. If a stock has a lot of wicks, what does that mean? Well, so here's the thing, DJ. Well, do you have a stock example that we can look at? The question that you have to ask is, what side are the wicks on? Are the wicks on the highs or on the wicks on the lows? The wicks on the highs mean that there's more selling going on. Even though it may not follow through, someone's getting out. But if you see more wicks on the lows, obviously there's more buying going on and someone's getting in. You see that a lot before a stock will move. Like what comes to mind is like Roku, right? When I think of wicks, let's take a look at Roku. You can still see the old trade on my chart. I have to take that off. PSX, okay, let's take a look at PSX. But wait here, while I have Roku up here, I mean, you see all these wicks at the top here? Look, wick, 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 wick. Even though it's a tight consolidation, that, obviously someone is selling up there, okay? So let's take a look at PSX. Let's take a look. Is that right? PSX, Phillips? Okay. So let me see what let's see what we have going on here. I don't know why that's there. All right, let's take a look. So where do you see the wicks? Do you see them back here, like on this price action back here? So, okay. So the thing is, I mean, look where they're appearing, right? First of all, the momentum's bearish in this situation, right? You have lows, you keep taking them out. Another low, you take it out, and you notice, yeah, you have a bullish one here followed by a bearish one, but your previous momentum is bearish. You take out that low, you keep taking out the lows. The wicks mean what actually occurred here. Again, this all goes back to order flow. Buyers tried to step in and were just shaken right out. They were just pushed right out. Okay, and then the low gets taken out, which is a very bearish sign. So yeah, you can't really, it's after the fact it's easy to look at these and look, oh yeah, that, sure. But when it's happening, it's very difficult. You can't really trade off the wick. You really need to look at the structure around you as well, because they can appear randomly, and sometimes, depending on their context, they may not really carry much meaning. All right, so okay, sure, no problem. Ankit is okay. I'm gonna type that name in there because I know with these Indian stocks, they typically use the whole name, right, and not a symbol. Oh, Abbott India, sure. Okay, I guess it's Abbott Labs, but the Indian version, I would imagine. So they're what, pharmaceutical or biotech related stock? If it's the same Abbott that I'm thinking of. So here's the thing. You have the bullish structure. This is a pretty nasty consolidation. Very tough to sit through this. I mean, it's just like, look, one red candle after another, after another, after another. This can lure people into getting short, but the structure is not bearish, though. That's what you have to keep in mind. You're fooling around right now inside of this old gap from that dates back to March. One problem here is this old resistance tried to be a support and failed. Okay, so again, this one is going to be obviously news driven because, with all the stuff going on, these pharmaceuticals, they're all looking for some kind of miracle, whatever they're looking for. So that's what's driving these things. So I wouldn't sit there and be scanning the news for stuff. That's not really going to help. You need some sort of structure here. Well, Michael, you know what? The location isn't bad at all. What I'm not crazy about is the lingering. There's just better opportunities out there. But what I also don't like about this is just there's no setup at the moment. These are just red candles, red candles, red candles, red candles. It'd be nice if this thing could produce a bullish pin bar or something. All right, it tried with this little doji back here. It tried, but then it gave it back. So that means, keep in mind, all these longs that jumped in are getting pushed out. Okay, so maybe if you get another failed low here, this would be worth a try. So, many people will be on the short side, right? So if there is a squeeze and you start taking out these highs, like 15,622, you start taking out these highs. That's when you're going to see the squeeze, because the shorts are getting squeezed on top of all the new buyers buying into this thing. So the location is good. You just lacking, what you're lacking is the more recent structure. Like you need a failed low or something like that, followed by a setup. Then that would make this thing a good candidate. Okay, and it's got some room to run too. That's the other thing. It's got some room. I mean, even if you look at the middle of the range here, you have some potential. So not bad in terms of reward risk. Just need to wait for a better setup. Let this thing do what it has to do, and when that setup appears, then it would make a lot more sense. Okay, so cool. Thank you for sharing that one. All right. So any other questions about stocks that you guys would like to see? And by the way, if you're new to the Greenbridge channel, again, check out greenbridgeinvesting.com. We do swing trade signals by text and by email. Everyone here, a lot of these, I think all of you here are customers. So you guys know. We also have portfolio management ideas, and we have analysis and perspective in the chat room all day long. Thanks to Andrew, because he's in there sharing stuff at like 4 a.m. So, make sure you check that out. Plus, if you like what I'm doing here, give me a like, subscribe to the channel, right? Let me know what you like what I'm doing. So otherwise, I feel sad. I'm just kidding. All right, that joke's getting old. I have to stop with that. I like to repeat the same jokes, by the way. All right, so do I have any other questions about here? Is clearly a higher low relative to all this other structure. It's just Roku is it could be a pain, all right? And it's going to be sensitive to the NASDAQ. So what I would like to see the buy signal show up in the NASDAQ, and I'd be more comfortable with something in Roku. But we may consider this one. We're going to have to keep the risk obviously very tight. We're going to have to keep it at 1% because when this thing pulls back, it sucks. Okay, so it's just something to keep in mind. The range low here on Roku is 145, that 145 area, but that's not really a major support. If it clears that area, then you're looking at this support here, which is what, the low 130s, and that would probably be the more ideal place to get involved if it were to produce such a move. So that's really what we're looking for. A lot of this has to do with the probability of location, and that's where a lot of ideas begin. There's movement all over the place, but we don't chase. We wait for the probability to line up so that there's a better chance of a favorable outcome. And even then, we don't get a full, sometimes, we still get stopped out, right? So there's no 100% to this. One thing I want to bring up too real quick is something like Ethereum. I know you guys watch some of these. Hold on, that's not Ethereum. Ethereum. See, because again, something like it, obviously it's following Bitcoin, had that nice move along with Bitcoin there. You're going to get a lot of people jumping into this now thinking it's safe. All right, this is not the place to buy Ethereum. So just something to keep in mind. If you're in it, great. You should be locking in profit, take money off the table. XRP, that's Ripple, right? It's probably same situation, vertical, right? They're all piling into these things, which is a sign of a frothy market when you see these garbage altcoins. I mean, I call them garbage because they don't really provide any value yet, okay? Not really. They're just ideas, a lot of them. So they're very speculative. Vertical move, they're all piling in. Nice high or low, look at that. But you're near a failed high area. So this is a very risky area to be buying into this. Very risky. It can go a little further, but I wouldn't take the chance. No way. I'd want to see a pullback. I mean, why can't we just get another higher low like this? That would be nice. And these things repeat. So we'll see that. Michael, and this is a good example of, look at the magnitude of the higher lows. First you had this broad move, right, off the low. Then you had a broad higher low, very broad and very long. It took like, 2 months, okay? Followed by the pop, and then you got a minor higher low. It's the same idea, right? The same structure, it's just smaller, different magnitude, okay? But this higher low contributes to the context of this move because it's in proportion. Everything is proportional. Emotion unfolds in proportional ways. So anyway, all right, you guys. So we ran through a couple of extra ones there. Cool. And thank you for bringing up all the different markets that you guys like to see. Do I have any other questions before we wrap this up? Any other questions? When you are talking about a bullish or bearish structure, how long are you watching? Okay, Hammond, good question. Well, if you notice, I always look at daily charts, okay? So when I'm referring to broader, I'll use the word broader usually to refer to these larger movements. And here, what I'll do here is I will highlight the movement for you. No problem, DJ. So I would refer to this as a broader higher low, all right? But so and then relative to this move here, that is a broader bullish structure because you have a push and then you have a higher low. Higher lows typically lead to higher highs. Since this is a pretty broad move, right? We have two swings here. You have this swing and then you have the consolidation. I would anticipate a higher high of a similar magnitude, meaning it should take out this high over here, all right, which it has done. And now we're going to see how much that follows through or not. But that's what I mean. So it's really a factor of magnitude. And to get a better understanding of magnitude, because again, we could talk about this little mini bullish structure in here. You have a push, you have a higher low, and then you have the push, right? The next swing there. That's the same idea, smaller structure, smaller magnitude. Meanwhile, when we were in this consolidation, you can argue and say, well, you have lower highs in here, lower highs and lower lows, and it's bearish, but this is not bearish. Nothing bearish about this. Because bearish means it needs to take out lows relative to this broader swing here, which is what's in control. Okay, this is the swing that's in control. This is just correcting it. And now this is the next leg of the swing that was in control. So what I was going to say is, to get a really solid understanding of magnitude, the concept of magnitude, you should read about Elliott wave, or maybe you're familiar with about Elliott wave, but a lot of these concepts come from Elliott wave, like nested patterns or robust fractals. That's, a shape within a shape. That's where the concept of magnitude comes from. So obviously you get like a giant high or low, but you get also smaller ones. It's the same idea, it's the same situation, it's the same thing happening. It's just the magnitude is smaller. Okay, so Elliott wave can really help you understanding, how to view previous price structures and how to incorporate them into your analysis. Okay, you don't have to sit there and count waves all day just to get value from the perspective that it provides. Yeah, DJ, thank you for bringing that up. I did a couple of webinars about Elliott wave. If you go into the library, I did the impulse wave. I also talked about the corrective waves in a separate webinar. So there's a lot of explanation in there. You can check those out if you go to our website and check out the library. Thank you, DJ, for bringing that up. All right, so great question. Great question. All right, so do I have any other questions before I wrap this up? Any other questions, you guys? Really appreciate the participation and all the great questions. So today was the FOMC meeting, and we didn't get any dramatic move. Which, okay, non-event. We like non-events because that means we don't have to make much. We don't have to adjust for much when we get a non-event. So yeah. All right, you guys. So if I don't have any more questions, I'm going to wrap this up. We'll do this again in a couple of days, and we'll see how the market is closing out the week. And keep an eye out for that ADVM. Oh, and by the way, before I turn this thing off, let's just take a look at a couple of. This was the play of the week 2 weeks ago. It's hanging in there, right? Look at that workhorse. Not bad, not bad. You could see the trade idea on that. We sent that out about 2 weeks ago, and then I had refer, which we sent out the other day. Refer didn't trigger yet. Okay, so those are the plays of the week that workhorse is actually in play and refer is not yet in play. All right, we talked about those on the podcast. So anyway, all right, you guys, again, thank you very much for your participation, and I will see you next time. Have a great day, and thank you for watching.